Welcome to TradeTheMBI.com. This is John. This report is for the 27th of February, and well, right as we got up to that peak just over the 28, I said we could expect to see some pullback into the move, and now we're getting close to the ABM. Let me go ahead and put those numbers up so you can see what they are. That's at about the 27.73 range. And we had a series of positive extremes, and we're finally getting the daily meeting that gold with the Azure, right as the shakeout is forming a little bit lower peak here at the highs, which you always look for from a weakening standpoint. Of course, we had that magenta candle, which is usually that expression of a DOC spread. We thought it was premature right here, right at support. It was, and we were saying, hey, we need to see this kind of flattening of the gold along with the Azure meet up to really signal that we're getting closer to something that could have a little bit more strength to the downside. Likewise, you can see the same thing on the NASDAQ here, even though that's still a little bit stronger. And the fact that it's still going could contain any kind of dip at this particular time. That rising euro definitely helps support as well, and that's been a strong push back up. So that's keeping things getting, I wouldn't say ugly or anything like that, because a little bit too much of that doom and gloom gets spread constantly, and it just, there was no justification for it. I mean, you still have great optimism in the U.S. Economically, and again, this is the same thing that happened in the mid-90s when the economy just kept growing steadily and everyone was like, no, it can't continue, and that's what forces it to continue, because so many people bet to the opposite side of it. It actually helps push things forward. The fact that the Fed has kind of reversed itself from where it was headed really gives a greater potential for things to continue. And we can see that in gold, because gold would not be like this if there was really these strong fears of recession, blah, 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 blah. So it's always a good indication to be able to look at something like that. And it says that you're more likely to see inflation than you are not, which is an indication that we're probably going to see more growth. From our 5K standpoint, so we had our dip. Had a couple little buy signals. It was a slow buy, it took forever, but that happens a lot with these, where we just had a continual rising of the DOC red, along with our shakeout, was improving continually, coming off that big dip below the negative 13.5. Then we got into some overbought. It retraced, fell a little bit, no real shock with that. We got up to a couple of the peaks. Beautiful splits right there after a series of positive extremes. Filled all those back in nicely, right to what exactly at 27.93, supported right off there. It was really hard to get a decent buy configuration out of that, so it was mostly just a return cover from there. But then we got right to the peak, and that was just a perfect DOC spread. 2,800 a quarter. I think I got a little better than that on mine. Where was I at? 2801. So right in a similar range. And then, of course, cascade lower. Once you broke that 29.93, we retested it here just briefly in the pre-market, and it's broken down. We're below the negative 13.5. We had that dip below the red line, so we made a lower low, now higher extremes, but we'll see if this is able to produce a little bit more bounce on a dip down, and the super oversold was bound to create some kind of bounce, but it just wasn't enough to push it above that at this particular time. So it was a clean signal, and that's, you've got to love it when it's easy like that. Of course, it immediately starts right against. I got a little bit of an improvement from where that was. We dropped all the way up to 2801.75, so it was a few ticks up against me before it finally rolled over and continued the decline. We've got a little bit of a warning right here when the steel crossed, but you didn't have the dip of the orange, so really wasn't overly concerned about that one at all, and I had my stops well above the turned out to be the high. As you can see, I lowered them since then, now that we've dropped back below there, and we'll have to make a new high for that for now, unless there's a change in the readings. That's currently where things are. Let me expand this so you can get a nice clean view of it. And looking good from a 50K standpoint. You can take a look at that from the broader measure of it. clearly within the DOC spread you had the breakaway, and that's led to the decline right there. Under our configurations, this would not be buy setups looking at it from that standpoint, but I will be sending this out adjusted because I've made some more changes that will delete some of these other occurrences. So we'll have that for going into next month's indicators, which is exciting because it's only improved as we've narrowed the ranges, tightened up where the stops and the follow-throughs would go. So it's really just improved it more and more. They're subtle, but still makes a significant difference. The daily also bought a Starhawk right there at the 27.95. So this subtle deviation move really isn't going to impact it all that much. And if we look at that from a performance standpoint, we should be very close to equity highs on that. If we look at the performance graph, I need to make a little adjustment on this so that you can see it. There we go. It gets it all into the screen that way. So the little dots represent equity highs, and that's where this, well, after all these years, just continues to be a straight up. That period of the Fed involvement, now that that's going away, we're getting much more consistent results from it. And still over 2.0 profit factor. That's only going to increase as we add in some of the follow-through ones, which will be within that Opus 2 construct that I've been creating. So, very exciting stuff. As always, though, I will keep updating you on anything relevant and put it up on the Skype chat. And we'll get ready for March, which I think could be a little bit more explosive than we saw for February. At least February was explosive in one direction. I think we're going to get a little bit more gyration going forward once you have this complete capitulation from shorts. That's usually when things get a little more interesting because it's much tougher for longs to have to push things on their own when they don't have support. So then we'll be able to see if anything significant happens politically, because that could throw uncertainty and people get a little frightened. That always creates a little bit of distribution selling and or repositioning. So we'll take it from there. As always, trade well. We'll talk again later.